Good evening, everyone, and welcome to this evening's NIPE event. I'm David True, and those of you who've attended these events before probably know me, but those of you who do not. I'm actually the president of NIPE, and we've been doing these events for probably over 10 years now. And I hope you do find this one interesting and interesting enough to come back and join us again for one of our other monthly events. To get started, I want to thank our partner, Davis Wright Tremaine. They have been great and supporting us for a long time now, and they make it possible for us to do these events. So kudos to them and thanks. Couple of housekeeping things. During this event, just please use the chat, post your questions there, and I will feed those questions up to Dan, who's moderating, and we'll get the questions answered. And the other point is that at the end of this, the discussion will last for about, 55 minutes. Time for a couple more questions. And then we'll have a couple of 10, 12-minute breakout sessions where you'll be put randomly into a room with a smaller group to sort of do a facsimile of the kind of networking that we would do if we were an in-person event. So that will comprise the 90 minutes or 85, 90 minutes we'll be together tonight. And as you know, the topic is super apps. I think this is what I've been wanting to do an event about for a while. You got PayPal out there who's saying they're going to be one and made a lot of noise about it. You've got lots of talk about whether Uber's going to be doing it and wondering what Walmart's going to roll out at some point. So it's a very, very proximate topic. And I'm very, very delighted at this great panel here tonight. Leading us, doing the moderating tonight will be Dan Lattimore, the SVP and Chief Research Officer of Celent. So I just wanted to thank everyone in advance and turn it over to Dan.
Great. Well, David, thanks very much. And thanks to NIPE for having Celent here. For those of you who don't know us, we are a technology research firm, and we are focused solely on financial services. And I have to say, when I first joined 10 years ago, folks would say, well, Dan, what's your new gig? And I said, well, I research financial technology. And they'd be like, I'm getting a beer, and I would never see them again. Now, financial technology is incredibly hot, and I'm delighted to have a tremendous panel with us here this evening. On the East Coast, at least, it's evening. For people like Greg, it's mid-afternoon. And we're going to talk about super apps. But first, I'd like our panelists to introduce ourselves. Amanda Orson Curve, would you kick us off, please?
Sure. So I'm Amanda Orson from Curve. I'm currently the lead executive responsible for expanding Curve into the United States. I've been around for about 2 years. Most of that was rowing the boat across the Atlantic solo, but we've had a little US team here since about March of last year. And it's been a very interesting education learning the fintech system here versus overseas.
Okay, terrific. And Will Graylen of OviLoop.
Hi, I'm Will Graylen. I'm the CEO of OviLoop, and I've been building OviLoop for almost 4 years now, since finishing up my 3-year commitment as the global co-GM of Samsung Pay. This is after they acquired my last company, LoopPay. I naively wandered into the payment in the fintech space in 2002 after I sold my first security software company. And so 3 fintechs later, I'm still at it. All of my previous 4 companies were all acquired by large publicly traded companies. And I came out here to the East Coast in the Boston area to go to grad school at MIT after serving 5.5 years as a nuclear submarine officer. And but right now, my passion is in fintech as well as EV tech, and my fintech passion, in fact, has been leading up towards this topic that we're talking about today, which is super apps. And when I was at Samsung, I recognized that what we were building was really just a mobile wallet, and what people in China was building, like WeChat Pay and Alipay, were really super apps. And the US needs that strategic imperative to get towards a super app. So I'm happy to be among this panel and looking forward to our discussion today.
Terrific. And a quick interjection for a housekeeping request for all the audience. Could you please turn off your microphones and your cameras? And with that, Greg Smith of FT Partners.
Sure. Hey, everyone, I'm Greg Smith. I've been with FT Partners for about 8 years now. for those of you that don't know us, we're a boutique investment bank focused exclusively on fintech. And we basically do two things: help fintech companies raise capital or sell. So we're always kind of telling the growth story of fintech companies to either investors or strategic acquirers. Prior to FT Partners, I spent really almost my entire career as an equity research analyst. So I started covering publicly traded fintech companies back in the 90s and pretty much covered every different area of fintech from a public company perspective throughout my career. And then at FT Partners, I wear a few different hats, but one is as a director of research. So hopefully you've seen some of the content that we publish, including a recent super app report, but I oversee all that content creation. So anything you see from us getting via email, LinkedIn, Twitter, on our website, I help oversee as well. So pretty interesting seat, kind of seeing everything happening globally in fintech.
Right. Well, and so Greg, that's a great segue. You all have recently come out with a report called The Race to the Super App, and Will talked about Alipay and WeChat Pay. Can you give us, step back for a minute and give us a definition of actually what a super app is, and maybe a couple of examples that those of us here in the States at least might be a little bit more familiar with?
Yeah, sure. I think it's really simple. A super app is really just a single app that enables a consumer to get access to multiple products all in one place. It's as simple as that. So think single sign in, able to get access. I mean, those of us in financial services tend to think of it through the financial services lens. So think of banking, payments, brokerage, trading, crypto, even all of that under one roof. But it also could be other things, travel, things you're doing kind of on a daily basis. We've obviously seen other things incorporated into a super app coming out of Asia, starting with messaging or with Alipay. So it can encompass a whole bunch of things, but all under one roof. But I think there's a key element in that it's really got to, in my mind, it has to provide greater value than the consumer could just get by going to each of these, going to a different app separately. If it doesn't have that, what's sort of the point of it? So that's really how we describe it. And there are different models. I mean, to give you the examples, I think we do need to just touch on, and we can get into this more, sort of the different models. One model is just the winner take all. We're going to offer all these products ourselves, no other third parties involved, and we're going to get the benefit from all of that. A good example of that is typically what you have a bank today, a Bank of America, a Wells Fargo. Some of the newer companies, I would put Revolut in that model, or even Square. Robinhood seems to be going down that path. So very brand centric, providing all the products themselves. And then the other model is really more of an aggregation kind of, or hybrid model. And there's a couple different there. I mean, a hybrid just implies we're going to offer our own products, but we're also going to offer other people's products, but we're going to integrate it in a way that makes it seamless for the consumer. But another version of that, which you're going to, I'm sure, hear a lot about from Curve, from Amanda, is kind of the over the top kind of technical overlay super app model, where through a single app you can see all your disparate financial relationships, and then providing some ability to interact among those. There's lots to unpack in that model, different things that you could do, but I'll sort of leave it at that for now.
Well, and Amanda, that's a great segue to you and your experience overseas. We haven't really seen yet that equivalent in the US of an Alipay or a WeChat. Why is that, and will it ever come to the US?
I think so. Why hasn't it? I think to do an analysis of that, you have to look at why WeChat, Alipay, Grab, Paytm, why they began. Historically, they began to serve some other need, like they were a chat or they were a fulfillment merchant services center, and then they incorporated fintech. So a lot of it seems to have been anticipated by the everything is fintech thing that we're talking about now. The US, and this was learning for me as someone who's fairly new to fintech compared to the rest of these panelists, the US seems to lag in fintech adoption versus the rest of the world. Everything gets shipped in probably Africa or India or APAC first, and then materializes in the Western world, and then eventually comes over here because of our patchwork quilt of legal and regulatory requirements compared to having like one FCA in the UK, those lucky guys. It's much more onerous and uphill. But why hasn't it happened in the United States yet? I think we're well on our way. I think that we will see multiple models. I think that exactly what was just described, the aggregation model, the winner-take-all model, I would not at all be surprised. And I think the closest analog to the way that has grown in APAC in the United States is probably Walmart, where there's one company who's controlling commerce endpoints and is probably able to command higher margins because it's a closed loop system. That seems very similar to one of the precedents that have already happened, but it's not the only way it will take form factor here. It really is going to come down to who provides the most customer convenience by having like one point of contact, and then is able to offer the customer choice and efficiency, whether that efficiency is convenience like time or the efficiency is in money. That's going to be the winner for the super app race here.
Mm-hmm. Well, and Will, so we've talked about the value prop to consumers, and you're coming at this from the payments perspective, but can you elaborate some on the potential value of the super app and what it's doing for people today and what it could do, building on what Amanda just said, but also we look at Alipay and WeChat, and they're doing things like health insurance, and when you book a plane ride, they'll give you travel insurance right there. Is there value in going, a third or a quarter or a halfway rather than to that final all-encompassing super app that's going on in China right now?
Well, I think even if you look at China, it was a progression before it led to where it is today. When Alipay first started and WeChat Pay first started, they started with a value proposition of convenience. Then they started adding additional value that over time just became more and more convenient, where your wallet and the merchant's POS is seamlessly integrated and unified, so that it cuts out a lot of friction, a lot of fragmentation. And I would say the super app is not really just an app, this misnomer. It's really an experience. So how do you have the level of convenience and the level of value that that bridges wallets and POS? That's the fundamental challenge that we have in the United States, is that we have first got to identify what the problem is before we can even talk about what the solution is. So, if you look at the US today, the fragmentation of wallets and POS across channels, across devices, and across tender is it's very complicated. It's very complex. And why do we care about this complexity, and what does it matter? Well, what it matters is that when it was the old days where it was our physical wallet, by the way, our physical wallet is very private, right? Everybody owns their own wallet. Even my wife doesn't really get to touch my wallet very often unless I give it to her. But our private physical wallet, when we go to the physical storefronts, all of our before, during, and after transaction is happening right in that environment where the POS and the wallet merge. I get my customer service right there. I have any questions, I can ask the clerk. They offer me credit if I need it, offer me rewards. If I have returns, I go right there. It's all one place. But as we have moved from Web 1 to now Web 2, and soon we're moving to Web 3, all of that, you got more channels, you got more devices, you got more tender types, from the likes of PayPal to now Apple Pay, Buy Now, Pay Later, etc. And all of that complexity means that there is no one easy way. There's no universal digital wallet that works across all of these different channels, devices, nor tender types. So all this fragmentation means I have different ways of doing different things, which is more complex and it's more frustrating. And none of our wallets, by the way, is private. None. So that means we're using Web 2 technology, whereby our digital content, along with all of our peers, are stored in one database in somebody's database locked with one key, one encryption key. So that whoever gets access to that key, whether it's internal or external cyber hacking happening every day, as you can see, they get the keys to the kingdom. And that's why you have massive amount of fraud that's happening. Also, not just that, but the lack of privacy when it comes to our PCI, PII data. Also, there's lack of privacy when it comes to spam. Our data is everywhere, and we're constantly swiping to get rid of spam. So that's a poor experience to start with. But beyond that, think about the amount of cost to the brands and the merchants. The brands are not happy about spamming you, but what choice do they have? They have an email list. So it's a poor customer experience when it comes to checkout. You constantly having to do 16-digit numbers over and over again, like people don't know you. There is no good loyalty program, despite 10 plus years of Starbucks experience that we're used to. But who else has got a Starbucks experience? Not the moms and pops. Nobody can afford that. And then you got customer service, which is still relying on this. And that's not a great experience in terms of a phone call. So this is the fragmented West that we're dealing with. But when you go to China and you look at what WeChat and WeChat Pay does, is it unifies basically the wallet and the POS, so that if you have questions, you can actually message your brand. You can order stuff right there through that messaging app. Your wallet is everywhere, whether it's on your PC or on your phone. So it's not just the app itself. And you get all of this closeness between the merchant and you, where your wallet and their POS is now unified. Well, how do we get there from here? And that's the biggest question. And that's why I've been looking at this problem. And I go, okay, first of all, we do need absolutely a private digital wallet. So all of the previous wallet, including the one that I was working on with Samsung Pay, competing against Apple Pay and all of this, we can't store people's data in the same way and expect that to be a true digital wallet. So we came up with a, BIP32, BIP39, crypto vault for everybody to put their credentials. And it's not just for cryptocurrency or NFTs. This is for all of our data. So once we have a private digital wallet, then we look at, yes, it's got to be iOS, Android, PC. It doesn't matter. It got to be going across all the devices. And it's got to work across all of the channels without expensive POS changes, which is why, we're able to do tap and pay in the physical environment. We're able to do one-click checkout in the online environment. So we have to address the cross-channel, cross-device, and cross-tender conundrum. So my thought about the super app is unifying the buyer's wallet and the seller's POS across channels, across devices, and across tenders with one-tap rewards without having to change the POS, one-tap offers, one-tap customer support, and of course, one-tap checkout. So that's the future, and it's hard. It's really, really hard to do that. But whoever is able to do that and bring that value to the merchants and give them the tools to better engage with their customers, that's where the value comes in. So I'll pause right there and I'll throw it back over to you, Daniel.
Yep. So Greg, the question for you is, who is best positioned to do that?
Yeah, well, that's when I think about that, that's very focused on sort of payments and point of sale. I mean, there's also the whole world of just getting a loan and other things. And so the answer is I'm not sure. I mean, I think that is a difficult problem to do. I mean, it clearly is. There's sort of different checkout folks on e-commerce versus checking out in the real world. There's different gateways, merchant acquirers. So yeah, it's a really difficult problem from the consumer end. I mean, the person you think about in something like that is obviously PayPal. They're somebody that you're using for checkout routinely, but they have not been able to really get to the point of sale. That's been their challenge. They've tried different ways. I think I was the only person that ever used PayPal at a Home Depot when all you needed to use was your phone number. I used to always have to tell the employees where on their screen there was a little button they had to press.
You're actually one of two.
Okay, there we go.
That's
But
good.
PayPal obviously seems like they're in a great position. I mean, Visa and MasterCard have tried different checkouts, and I think all of this just tells you the complexity, and it brings up a good point when you think about the super apps in Asia versus the US. I mean, in Asia, they didn't have this credit card infrastructure that we have today. So for everyone to sort of move to using a QR code and pay at the point of sale, there wasn't the same friction there is if we try to do that. If we try to do that, there's the whole interchange infrastructure, and banks aren't going to like it. Merchants want it, but then you've got to incent consumers to get them away from their credit card points. So it's very difficult, I think, for us to just repeat what has happened in Asia when you really think about the way those models evolved. Also, sometimes there just weren't great existing solutions. We've got great credit card products, great lending products, great investment products, which to me gets back to the issue. To really be a super app, you've got to be adding greater value. So not sure I really gave you a clear answer there, but just kind of some of the issues that in hearing Will talk that I think come to the front.
Yeah, I totally agree with Greg in that you got to bring more value than just paying with your phone, for example, right? My credit card is actually pretty easy, and paying with my phone is nice. But just to give some scale, I mean, let's be real. We don't have a super app here in the US, and everybody should know that. And Apple Pay, Samsung Pay, Google Pay combined, and all of the pays combined represents $0.1 trillion of transaction volume last year, which was about roughly 4.5% of consumer payment spend. Compared that to 83+% for WeChat Pay and Alipay, and a combined $67 trillion in turnover. There's just no comparison. So we're far behind, and it's because of the fragmentation, as you pointed out, Greg. You got folks like PayPal that only works online, but not in the physical environment. Same thing with Venmo and Cash App and all of the online type of payments. And then the three big players, they're only doing payments for their own phones, and they want to lock into their own ecosystems. But still, what other value do they provide other than paying with your account? So I think to really solve that problem, you have to address the cross-channel, cross-device, and cross-tender type of solution to make that bridge happen. It's still yet to come. Is it going to happen? Yes, it's going to happen. We're going to have super apps in the United States, but it's not going to happen the same way as how China built it. And by the way, the other super apps, you can think of in other ecosystems are like M-Pesa in Kenya, right? So why wasn't that replicated sooner in other places? It's because of the Galapagos Island effect, that every ecosystem is different. So, but the principles of convenience and value, and now in our society, our care about privacy, those three things has to come together. Those are the key principles that has to come together.
Yeah. So we've got a question from the audience around Apple's recent announcements in terms of unifying the wallet and the point of sale system. Is there a potential, or is one path for Apple to become essentially a hardware super app? I'll toss that out to whoever's interested in it.
I think it's possible, but the problem with Apple, the way that I'm thinking about it, Alipay, they grew on the back of being step changes better than alternate ways of paying because it was much more convenient. But one of the core values about what they did was internalizing that their number one goal was to provide happiness for users, unlike other payment systems. And I think the fundamental difference between Apple's ecosystem, which is remarkable and always comes back to selling you more hardware, is that Apple and the Apple ecosystem wants to put Apple at the center of your money, not you. So can it do it? they have a lot of scale, they have a lot of distribution, but is that the right thing for the consumer? Is that what the consumer wants? I don't know, especially when we just heard Will talk about privacy. Yes, they're the privacy brand, but they still have all of your data. They still have, they're building the closed wall around you and your money into their ecosystem. I don't know if every consumer wants that, particularly not in the Web3 ecosystem.
Yeah, I would just add, Apple is in an incredible position to do a lot. I've been sort of surprised they frankly haven't done more. I mean, they are in an incredible position, and they've obviously offered the Apple Card, which I think of as very different than sort of Apple Pay. Apple Pay, you can not connect to everything, but obviously they let others in. The Apple Card is a proprietary Apple product. I think building on that, there's lots of other products they could potentially offer. And if they were to integrate them in a really great, seamless way, and the apps were better than other apps, and you felt like you were getting a better deal by taking the next Apple branded product, I think they could build and expand their business and financial services dramatically. I do think there are, our philosophical issues around them using your data. It kind of creates a conflict for them just given their position. So I'm not sure how they handle that, but they're still in an incredible position to offer a bunch of proprietary products and monetize their customer base. So I'm anxious to see where they go next. There's lots of chatter about them internalizing their processing and other things. I mean, you only do that if you have the intention of expanding and your product set. So I think they're absolutely somebody to watch. But again, I've been a little surprised they haven't done more to date.
So
Yeah,
let me ask you all this.
8 years after Apple Pay, we're still talking about low single-digit percentage penetration, and Apple does a great thing to provide better experiences for their users, and they care about that experience passionately. And one of my former product managers, was responsible for this new product with the POS, which is the announcement I think you're talking about, with the contactless acceptance. But I don't see that as really any kind of a game changer for unifying POS and the wallet. That's just a opening up, of their radio for others to be able to use that radio to, accept a contactless payment. That's far from unifying wallets and POS. And by definition, it's going to be very hard for anybody that is fragmented and their business model being to either sell more devices or sell more ads, to truly put together a unified wallet POS platform as a basis of a super app. So I think a lot of the usual suspects that we're looking for them to emerge, why haven't they emerged, whether it's PayPal or Apple or others, why haven't they emerged yet? I think it's more systemic why they haven't emerged yet. It's not that they don't have enough money or power or capable, but if you don't look at solving the problem that this ecosystem, meaning the United States, needs to have in order to have emergence, then it's hard without that clear intention to solve that clear problem. Then it's hard for you to emerge as a true super app.
Yeah, if I could add one thing, yeah, I'm thinking about the hardware you're talking about, where I think we're talking about the soft POS, where you can, consumer can use their iPhone, tap another iPhone and pay. That sort of has the potential to create a closed loop. Why wouldn't they then get into the actual merchant acquiring and do all that? And so you don't need any third party. You can do an Apple to Apple device payment, and it's all handled by Apple. So I think that's very, very interesting, and potentially disintermediates any other point of sale hardware. Potentially, you still got to remember there's still going to be people with cards that aren't NFC enabled. So that's a very interesting product and a sign of the future, but it's going to take a while before you could only use that. So I view that again as a hardware, a reason to sell more Apple hardware, to have more merchants have an iPhone, because now you can use it as a POS. But to me, it doesn't change the game in the super app until some large proportion of people are paying with contactless, I think.
So we've been focusing on the consumer, and rightfully so, for quite a bit. One of the things we're getting a lot of questions on literally in the last 6 weeks has been embedded finance and open banking and the like, which, and you all have been talking about folks really trying to do some lock-in, but open banking is all about completely changing an FI's mindset and saying we're going to be an aggregator and open ourselves up to really anyone who can meet our criteria. How do you all see open banking or embedded finance and its relation to the potential of a super app, broadly defined?
I mean, I'm happy to go quickly. I mean, what I say, it's never been easier to offer financial products. So anyone can essentially create a super app, create the products just by using embedded open banking products. It's just, again, it's never been easier. So I think one of the things it does enable the retailer to start offering financial products, or enable you to offer a financial product if you're somebody that's right there at the right time to offer those products. I mean, it's like the typical auto dealership. Why shouldn't they also be selling insurance as a embedded product at the time you're purchasing? Or, there's so many things that go along with a home purchase or others. So embedded finance, banking as a service, all that is enabling all that to happen. So I think part of the super app to me is just, you do one thing, it's enabling you to cross-sell additional products as well. That's kind of one component of the super app story. And I think that's where the banking as a service, embedded finance comes into play, because it's enabling a retailer to offer warranties. It's enabling them to offer buy now, pay later, all these things. And if they want to offer a checking account, they can. It's never been easier to do all those things. So it does open up the world of offering financial products to a much wider aperture for a non-bank to offer, what otherwise would be regulated products, and removes all that. And the technology and all these capabilities are only getting better. It feels like we're still sort of just getting started with regards to these products and who can offer what. I mean, every day I hear about a new kind of use case of somebody leveraging open banking or banking as a service to offer a product where you say, man, yeah, that just makes a ton of sense.
Well, and someone in the questions here, and there are a lot of them, which is great, and I'm sorry if I can't get to all of them, but someone talked about this notion of lock-in, and with all sorts of distrust of large corporations of various types, whether they have a license or not. Many are reluctant to get locked in, and in some cases, it's a question of who do they distrust least. But Amanda, you brought up this point of trying to make the customer just delighted with their experience with the super app. What can any U.S. corporation really offer that?
I think so, but I don't think that it's going to be winner take all. So if you've read the paper, and I hope that you have, the breakdown is the winner take all approach versus the aggregation model. I think the aggregation model lends itself to that. We of course are aggregators, so I feel like I'm touting the party line. Honestly, I think that it would be very difficult to be great at everything. And one of the problems for challenger banks, I'll pick on the challenger banks from the United Kingdom that have come to the United States and failed. Maybe not failed yet. Only one has exited, and that's the one from Germany, but they haven't done well here. And it's because where they've expanded to in the European footprint, what they offered was a step change better than that which existed. In the United States, they come here and they're forced into this commoditized position of having to take deposits and having to lend because they're a challenger bank. And then they have to offer and prioritize their owned and operated products. And it's actually in violation of their marketplace narrative. I think if you're an aggregator and you sit on top of the ecosystem and you're agnostic to what cards, what payments, what insurance products, whatever it is, you want to be able to offer the consumer, and instead understand that consumer deeply, address them in their most addressable moment, and potentially offer third-party products that are not yours. That's the right model that's actually consumer centric. And it looks a lot more like what Alipay has overseas. You see that they offer travel and leisure, they have shopping, they have utilities, they have movies, they have, I mean, it's a true super app. It is a one-point click to the entire world. It's got to be an aggregator model. It's not going to come out of one company.
Yeah, and one of the I tend to agree. I mean, I really think we're going to see multiple models, multiple winners, and over time it may sort of coalesce, but I think that's going to take a while. But to me, the most exciting thing is in the incentive for the consumer to be able to either have everything in one place, whether it's an aggregator model or a winner take all, is to get the benefit of an AI engine, just call it the AI financial advisor, seeing all your data, seeing all your transactions. Now, I know that spooks people, but if somebody's seeing all my transactions and knows, a lot about me, even, the type of cars I have. I mean, they could offer me smart advice on car insurance. They could see I had a kid and start recommending a 529. They could see I'm using one credit card where I get very little points, where I travel a lot, and they know I have another credit card where I get a ton of travel points, and be able to give you really good holistic advice, I think is going to be super powerful. And you can do that with AI, but I don't think we're still sort of there yet. I always say that the account aggregation, to have this at all, have all your different relationships and have the single engine above it. I don't think the technology's fully there. It's getting better. We're getting closer, but I think that's really compelling I want that app that's going to give me that advice, look at everything I do holistically, and not only just over assets. I mean, it can be over debt when you decide, hey, I need some money. Do I take out a home equity loan? Do I get a credit card? Take it out from my credit card. And, nobody really has an advisor even giving them advice over the debt side of the balance sheet. So that becomes really interesting and powerful. I think a lot of people are starting to build this. I frankly think every major bank's going to have some sort of PFM app that attempts to do this, and there'll be good ones, there'll be not so good ones. But if somebody really cracks that nut, creates an incredible experience, and I think would incentivize the consumer to want to use that app.
Well, and I think too, it ultimately will go beyond just financial services. So back to the car, hey, it's time to change your oil, or here's a good list of contractors when you need to renovate your bathroom.
Yeah, well, it gets mind-boggling when you think of all those potential use cases. Absolutely. And, but again, there it's like, is that super app going to be good at the auto related stuff? There might be a better auto super app where you put in your cars, your insurance, and it does all those things for you too. I mean, that's the challenge here, is there's going to be great siloed solutions too. So it's got to be good for you to want to do it all in one place.
I go back to solving some very simple problems first, which is some of the ones that I listed earlier that we still haven't quite solved. And I think once you have that layer of foundation, you have to ask this question: what's in it for the merchants and the businesses? And a lot of us forget to ask that question. And what are the merchants and businesses and the brands? What are they struggling with in this day and age, especially as they're trying to fight for the digital attention of consumers that are being pulled in every other way? And they don't have the right tools. They don't have the right tools for conversion, for retention, and they don't have a way to bridge their gap into the customer's wallet to provide that level of convenience. And that's the kind of solution that we need to create that bridge for transactions, offers, rewards, customer support, to create that value without a lot of heavy lifting for them. And when we can do that, then when we can do that easily across many merchants and across different devices, that's when the foundation gets laid. And then that's when some of the things that Greg talks about, can we make it even more seamless? Right now, for me to get a hold of my customer service it's a pain in the neck, whether it's an airline or a retailer or what have you. So how do we solve some very fundamental problems? And of course, some of these brands, when they have the customer relationships, they certainly want to be able to offer financing. They want to offer other value to their customers, but it's at the customer's choice on how they interact with these brands. So I think we are still far from getting to the point where the super app is all encompassing and guessing what we want and providing the kind of value that we need. But between that gap, we need to solve some basic fundamental problems first.
So those key next steps, I mean, Amanda, you all are working on this in Curve and in other tangible, concrete next steps in the next weeks and months. What are some of those?
One of the things that we're working on that I'm leading within the organization is to move us to being fiat and non-fiat inclusive. I think that it's a miss right now that so many of the financial apps are still engaging, and banks particularly are still engaging with the consumer's life like it's all fiat. Being a more inclusive product is definitely the way. We're going to start out with crypto rewards or Bitcoin rewards, mostly to allow people to sort of get a taste if they're intimidated by the current on-ramp from existing exchanges with the 12 steps and the doc and selfie. And it's a lot for my mom, never gonna happen. But if you have a standardized onboarding with normal KYC and AML that looks exactly like everything else you've ever done, and we're able to get you into the ecosystem, give you the ability to experience a reward that, while volatile, could appreciate with time, where the incremental value of every dollar, of every mile, of every point depreciates, especially right now over time. It's kind of like playing with house money. So it's a way of giving a little bit of the upside to a wider part of the market, to engage frankly, the millennial and Gen Z populations that are currently in that ecosystem already, who I think are going to drive the change for the future. And as we go, I very much am trying to steer us in the direction of inclusivity, which is to say that I'm happy to work with other partners that are better at things than we are for our customers. If that's insurance, great. If that's somebody who's really nailed PFM, and what I'm particularly interested in, you can take this to the bank, is PFM that's inclusive, meaning fiat and non-fiat, which is currently missing from the marketplace. And very few people have done the leap into a great mobile application-based PFM. We're going one step further and trying to make it a little bit more real time since we see your payments data. But that, I think you've hit the nail exactly on the head, Greg. That's exactly where I'm going. I think that that's the first layer. If you go back to the Starbucks model, what made it work was that it was convenience and payments combined with loyalty. And then they added additional convenience. Back before the pandemic, I think the year they introduced it, they had 12% adoption for order ahead. People want convenience. I don't know what the math on it is right now, but I'm sure it's many multiples of 12%. They want the convenience layer. If you can give them that, and you can engage with the merchant ecosystem in a way that allows the merchant to either preserve loyalty, to be top of wallet when it's topical for them to be top of wallet, to address the consumer, this is an old ad thing, address the consumer in their most addressable moment, because they're actually in market for a car. And you know that because you have their device ID and you know they're on a car lot, and you're able to connect them with various auto loans in-app. Like, these are the kinds of things that you can do when you combine location data, who that person is, and potentially a marketplace. Like, there's a lot of cool stuff that we can unlock in the future, but you don't unlock that stuff if all you want to prioritize are your owned and operated products.
And then for us at OB Loop, we're actually in beta right now for our one-tap rewards solution for brands and merchants to be able to sign up with zero POS change, whether it's physical or online. And that one-tap reward system is to democratize that Starbucks-like experience. And then also it ties into the consumer's Web3 digital wallet that allows them to store really any credentials and digital asset that they want. And of course, we have the patents on host card emulation for one-tap pay. And that allows us to have that cross-channel, whether it's in the physical or on the online environment, for the consumer to have a privacy card that they can shield their real bank account from being hacked, with one-time use card numbers and a privacy card that the transactions only show up on their wallet rather than on their bank statements. So that foundation for both a privacy card and a reward card at the same time inside of a one-tap wallet and messenger. By the way, we have a messenger inside as well. And that messenger has our patented one-tap and hands-free chats with people, groups, as well as businesses. So then we loop back between the business that offer them rewards and the consumer for them to be able to reach the business anytime they want for customer service or questions. And then for the business to be able to reach back to them with offers and rewards and deals. So it's a bi-directional consent. And anytime you want to opt out of that loop, you just click a button. So that private Web3 wallet as a channel for one-tap rewards, one-tap offers, one-tap customer support becomes the foundation for a super app. And for us, we're going through beta with professional sports team right now, major retailers, and we're also getting this out to mom and pop so that we can make sure that their experience is as seamless and easy to onboard. So we're going to work those things out in the next quarter or so, and now we're going to be partnering with merchant acquirers to finally give them the tools to go beyond fighting for basis points race to the bottom, and give them the tools to go out there and say, hey, you can provide this level of solution for your brands without them having to change their POS. Because me coming from the POS side, I was in mobile POS for a very long time. Both my mobile POS companies, one was sold to Verifone and the other one to Ingenico. I know how hard it is to change POS, even with EMV mandates, right? So do something that does not require POS change. So by next quarter, we're going to start stepping up the rollout. We're going to have more acquiring partners to help get the solution out. And to us, it's a B2B2C strategy, because there's no money for us to be made to try to give away free stuff and then mine people's data and sell people's data. That model was Web 2. That Web 2 model doesn't work in Web 3. Web 3 means you own your own data. So that's the direction that we're headed. And by the way, Amanda, we're very open to working on the non-fiat side, because to us, that's just another tender type. Once you have the wallet and the POS in one place, the tender type doesn't really matter. And the tender type of choice should win based on what the consumer and the merchants want. So that's the direction that we see that we're headed towards.
Yeah, I was going to say that just on the Web3 perspective, I mean, one way sort of you could get the same kind of super app benefit is consumers are going to have a data wallet. I mean, eventually we are going to own our own data. So thinking of that AI engine, I still could somehow be aggregating all that data on every single one of my accounts. And then I could just permission somebody. So when I need to go get a loan, I could permission somebody and they would get the benefit of seeing every one of my transactions across my account. I mean, I think that's also coming. I mean, whether it's Plaid or Finicity, one of these, they're going to develop that they or somebody else, that data wallet. So that opens up a whole bunch of interesting, potential for anyone to get that benefit, but only for a moment in time, though. You don't get the benefit of somebody watching all that in real time. And one other point I wanted to add, just thinking about PFM and inclusivity, PFM, obviously, yeah, I think adding crypto assets, even people are buying fractional shares, whether it's an NFT or not, fractional ownership of baseball cards and other things, reward points need to be part of that. And also healthcare. That's the other thing. Think how much people are spending on healthcare. I haven't seen that become part of a holistic PFM. You need to be telling people how much they need to set aside for their healthcare expenses, certainly in the US. So anyway, just wanted to add those in as well.
I completely agree. Every time I have a conversation with my British colleagues and I mention things like FSA and HSA cards, and then I tell them FSA cards are use it or lose it, their minds explode. It's absolutely a huge market.
Yeah, and where's a great PFM telling you which, when to use FSA, when not to, how much to put in there, how much you should estimate based on your age and your health and based on your current health plan. I mean, that's a great business opportunity right there.
I agree.
It all spells that you need a secure, private, self-custody digital vault that you own, and you get to store that data. You get to share that data, whether it's your health record, your driving record, if you want lower cost insurance, right? Your credit score. Let you be in control of your own data. And I think that's where the world is headed.
Well, and that sounds like an opportunity again for someone, and banks have historically provided the value of safekeeping. Can they be the vault for your data, even if they don't know exactly what's in it? That would be a value-added service. I would, certainly at this point, nor would my mom know how to set that up themselves.
Yeah, I think it's going to be a mix. I mean, I do. It sounds like something that an independent third-party firm needs to offer, but not necessarily. I mean, you obviously are going to need, there's got to be an incredible amount of trust involved. So I think from that aspect, banks are well positioned. But then again, the question is, how are they using that data? Do they agree not to use that data until you permission it? So those will be obvious key issues.
Yep, absolutely. We have one more question coming in around Google and Amazon and the amount of behavior and spending data they've already got, along with our credentials and wallet. Don't they seem to have an easier path to the super app, or at least one of the easier paths?
I think yes. So Amazon in particular, and honestly Walmart in particular, because they already have built-in distribution, they have merchant angle, they have large customer relationships, they understand your behavior of spending. Google less so. Google I'm less confident in, just because anybody who's been around the Google ecosystem for a while knows that they build really cool stuff and kill it. So maybe, but they could get distracted by inventing your failed communication or something like that and abandon Google Wallet. So I don't think so. Amazon and Walmart, absolutely, for that merchant-driven kind of Alipay sort of model, that makes a lot of sense to me.
Yeah, I agree 100% on Amazon. Google's just taking a different direction. I mean, they want to provide services to everybody and not kind of do what Apple's done. I think they just want to be the marketplace. They want to find new ways to display various marketplaces and get a cut of every transaction. So they want to be involved in everything, but I don't think they want to be viewed as competitive on a proprietary product basis. But Amazon, absolutely. It's kind of like Apple. I'm surprised they haven't done more, especially with just the amount of. I mean, I just think of my own life, and I need a box concierge because I can't keep up with the boxes every day. So now I have to have a box concierge to get rid of the boxes, just because so much is coming in from Amazon every day. You think what they know about your life, and and I've got a brand affinity towards Amazon. And again, and a big part of this, and the big part of the super app we didn't really talk about, if somebody gives you enough of a discount, you're going to go with them. I mean, when I shop at Target, I use that darn Target card because I get 5% off. And I think about, well, can I just go get it at Target because I get 5% off? Amazon, I use the Amazon card. I know I'm getting 5% off. So even if the website's not that great, whatever, that's enough of a incentive to get me to change my behavior. So if you add enough discount in, consumers will run to that. Look at the lines at the Costco and Safeway gas station things, which still boggles my mind. Consumers will do anything to save a little bit on gas, but those are powerful consumer incentives that I think will play in here as well on the super app development.
Yeah, I still see them as mega retailers that are maniacally focused on their own customer experiences, and they're great at what they do, providing Amazon one click. And in fact, I was just in Bentonville yesterday, with executives on that side. They're very focused on the experiences to provide value as a retailer and as a merchant. But to extend that to become a super app in the US, you have to have a lot of intentionalities, and you have to figure out how you serve these other merchants to create a community. And I'm going to use that word community for the first time here, but in our material and in our ethos is all about building trusted commerce communities. And they happen to be giants within the community, but they're one of the merchants. But can you think about, how do you bridge the gap between the brands, which includes the retailers, it includes restaurants, it includes financial institutions and card issuers and lenders and banks on one side of the equation and the consumers on the other side. So how do you design with intention to build a private Web3 super app that bridges the buyer's wallet from the seller's POS across all sellers, not just the giant sellers, but across all sellers? That takes a different DNA. So that's why I argue that the real super app that emerges out of this has to be able to serve all of those constituents in the community and strengthen the next generation community.
Well, and a couple of other questions have come up. One around social media, which is a form of community, but also where a lot of people are spending time these days. The other place they're spending a lot of time on, certainly during the pandemic, was in media consumption. What role is there for the social media outlets or channels, and also media in super apps?
Go ahead, Will.
Oh, I was just going to say, I think they're just another channel, because remember those mediums, right? Whether it's television, CNN versus Facebook or TikTok or Twitter, these are channels by which you can get eyeballs and get attention. So those are many channels, and a super app has to transcend across channels, across devices, and across tenders. Go ahead, Greg, sorry.
Yeah, well, I was just going to say simplistically, again, thinking about sort of the embedded finance concept, I hate to keep using personal experience, but my wife's on TikTok a lot, and she ordered an air fryer because she saw these things on TikTok. It looked like magic. She ordered an air fryer. Instagram's having the in purchase directly through seeing something on there. I think there's a huge opportunity for them to certainly embed commerce, and then they could be embedding buy now, pay later. Having the headless checkout. All of that, yeah, I think there's a huge opportunity there. But does that turn them into a full super app? I don't think so. It's more just taking advantage of the eyeballs and expanding their business and just monetizing their audience. I think the Wall Street pressure on all these businesses will force them to do. But I also think it can be a great customer experience when you see something and you just can go ahead and order it, and it's a seamless, straight through experience. You don't even have to think about the payment. So big opportunity there, but do they become true super apps? I'm not sure. I don't think so.
Well, and as someone in the comments has also said, this comes back to the question of trust and what happens to our data. I think, Will, you've harped on the fact that we've got to be ultimately in control of that, and we're not there yet. I know we're coming up close to time. Let me ask you all for your closing thoughts before we head over, and I know David will direct us, but Will, why don't we start with you?
I think it's really exciting times right now, and building a super app is definitely non-trivial. I've been in the traditional Web2 wallets. In fact, before I started down the POS side, building mobile POSs, I thought I was going to build a mobile wallet way back in 2002, very naively, by the way, not understanding the chicken and the egg problem that you have to get to resolve. So having gone full circle to start from a mobile wallet that eventually very quickly pivoted to become a mobile POS, and then providing solutions that competed for arming the merchant acquirers to compete against the likes of Square, and then to Web2 wallet, to now kind of full circle to bridge wallet and POS. I definitely see that for the US market, which is different than other markets, that's fundamentally what we need to do in order to create a super app to emerge. So there's a lot of complexity for this market, and it's not going to be easy, or else it would have already happened in the United States. And so we're certainly going to be one of those folks that are contending for being a super app. But ultimately, more importantly, it's about what value can we bring to the merchants and to their customers, and that's what we're focused on. So it's going to be exciting to see what happens in the next few years. And so that's those are my comments.
Okay. Terrific, Greg, since your mic is on.
Yeah, I don't have any strong message. I mean, I think we're going to obviously see multiple models emerge here. I think some of this is generational, that obviously millennials and the people that are really into crypto, are sort of one set, and there's others. So I think a lot of this is going to take some amount of time to evolve. But I think you do have to have a clear sense of urgency. The one thing we didn't really talk about is, what do you do if you're a bank? You're a small credit union, mid-sized bank, whatever. What do you do? And that's a question I think about quite a bit. And I think you've got to sort of think like a super app. You have to, otherwise you're sort of admitting defeat. You don't want to just be the commodity at the very end of this AI engine, where you're just one choice for the savings account and you got to offer the highest rate or something. I mean, I think we're going to see everybody still try to own the customer relationship. And so I think you need to think like a super app. What other products can I offer? How do I integrate it so it's a great seamless experience? How do I cross sell and bring something to somebody at the very, time that they're thinking about it? So I think, for banks, that's how they have to think. I mean, I still think we're going to see a ton of consolidation at the end of the day among financial institutions. I think all of this will cause a lot of M&A, just as people pursue a super app strategy. There's obviously buy, build, or partner. There's going to be a lot of M&A in this journey as well. So anyway.
Terrific. And Amanda?
I think that most of the super apps, if we look abroad, are storefronts or marketplaces built on top of a payments app. So interoperability is going to be the key. And for that reason, the incumbents are sort of disincentivized from that interoperability. It's going to take somebody that doesn't think about things like the perspective of a walled garden, unless they're large enough to provide all of the services. But I think ultimately the most consumer-centric choice will win. I think Alipay has proven that out. I think WeChat Pay has proven that out. Grab has proven that out. And there won't be one, I completely agree, there won't be just one winner in the US. Distribution will probably determine the ultimate winners because we're a very expensive market, 4% of the world's population and 1/3 of its ad spend. Good products die every single day for lack of distribution.
Yep. Well, and that's a great point. And Greg, back to your point, I was just talking to a $1 billion community bank the other day who was talking about the 3 fintech partnerships they've got. They've got the will. Whether they have the ability to actually execute on this is another question entirely. So Greg, Will, Amanda, thank you very much. David, back over to you as MC.
Yeah, well, you've really been the MC tonight, but now we'll take each of us will be shifted into a small breakout room, and we'll get sort of a, as I said earlier, a facsimile of a little bit of networking, and be able to ask those questions that you wanted to ask and we didn't have time to address in the group session. So I'll see you guys in a few minutes. Bill, that's your cue.
Here we go.